As they say, there is no bull market like a gold bull market. Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli, and the animal spirits are running high as gold approaches $4,000. What are we at? Shall we open up our CNBC futures? And we are at $3,967 even. Did we pierce 4,000? I'm sure we would have heard about it. Let us look here. Wow, we're back to the even numbers. We went as high as $3,998.20 on the CNBC December futures. You know, it's another example of the power of technical analysis. I mean, we were discussing this last episode with $3,900. The power of even numbers. It's quite something. And I should mention, this week we have Jay Martin, President and CEO of VRIC and VRIC Media. He discusses gold, he discusses the gold stocks, he discusses silver and the silver stocks and other metals that Jay is excited about. You're going to want to hear that. I think pretty sage advice. Time to take a little bit off the table if you've been in it for a couple of years, according to Jay Martin in today's show. So quite an interesting discussion there. We also have Albert Bauer of Becker Mining Systems. He discusses the digital twin and all of the latest technological developments that the company is working on. It's something that's come up here in the last few weeks. There's always been this notion that the mining industry is a slow-moving, backward-looking industry, but increasingly, this does not seem to be the case. And as money pours into the sector, one imagines the technological change, the technological transformation will continue. So we have Albert Bauer of Becker Mining Systems. So what are the reasons that we have here this week? And this is by a staff writer at mining.com. The record run has been underpinned by expectations of U.S. rate cuts, sustained central bank purchases, resilient safe haven demand, and broad dollar weakness. I would add a further reason, and I think of Humphrey Bogart in The Treasure of the Sierra Madre, and I'll never forget the look in Humphrey Bogart's eyes when he gets the gold fever. And I would argue the market is starting to get gold fever. As I began the show, the popular saying within the sector, there is no bull market like a gold bull market. It is particularly emotional. I would even go so far as to say what we saw last week with Newmont and VRIC announcing the departure of their CEOs on the very same day as gold was hitting records, that on deeper levels, that is a symptom, evidence of the emotional side to the gold trade. In a sense, as the surrealists sometimes like to say, there is no coincidence. So we have another headline because the gold stocks have had an incredible year. Gold stocks trounce AI-led chip rally with a 135% gain in 2025, while the major global semiconductor firms were up 40%. So gold stocks take out the AI-led chip rally. Now, that is only based on 2025, so that also should be kept in mind here. But as far as this year's investments, gold stocks decimated, actually, the AI trade. It more than tripled it. So if we look, and I brought it up on Google Finance so that we could see where we're at here year to date, according to Google Finance, GDX, the Van Eck Gold Miners ETF is up 131%. And the Van Eck Junior Gold Miners ETF, or GDXJ, is up 140%. So we're kind of back to Jay Martin here. Because for those of us who have been through a couple of bull markets, and I imagine many of the people who listen to this show have on their side as well, as Jay pointed out, selling is by far the harder part of the trade. So do keep that in mind. Of course, not financial advice, just some market wisdom that we are sharing here. And quick follow-up on VRIC here, while we're on the gold stocks. VRIC is selling their Tongon mine for $305 million, and that is in the Ivory Coast. One of the criticisms that VRIC had was that they were too widespread in too many jurisdictions and too many tricky jurisdictions, and that was one of the reasons their stock price was lagging. Interesting move, not sure what to make of it. Another headline, silver squeeze nears endgame, says TD analysts. So more kind of warnings here of where we are. Of course, silver is about to hit, I believe you'd call it a double top, approaching the $50 mark. Let's just quickly check the silver price. And the CNBC silver futures are trading at $47.90, just coming down above $48. So really speeding towards that $50 mark. And again, one of those even numbers, interestingly. Continuing on, this is absolutely fascinating and another parallel with AI and semiconductors. This is by a staff writer at mining.com. Bank of America recommends resource stocks to bet on AI. How interesting is that? And we have heard this with copper and the AI data centers and whatnot, but this is quite interesting. Let's take a quick look just to see what they are saying. Investors looking to ride the artificial intelligence wave should combine traditional tech exposure with commodities, according to Bank of America strategists. The bank highlights that the rapid build-out of AI-driven data centers is fueling demand for energy and raw materials, particularly copper. Quote, artificial intelligence devours commodities, wrote B of A's team led by Michael Hartnett. So copper really is the main star of the article. So another interesting parallel between AI and natural resources. Here's another example. And this is Bloomberg News via mining.com. Caterpillar emerges as unlikely AI winner on turbine demand. The hunt for winners in the artificial intelligence gold rush has landed on an unlikely target, old line industrial equipment maker Caterpillar. The iconic American company, known for its yellow excavators and bulldozers, closed September at an all-time high, as investors bet AI's nearly insatiable demand for electricity will fuel orders for one of Caterpillar's lesser-known products, power generation turbines. AI initially fueled dizzying rallies makers and software firms. Then as the power demands became clear, a boom in shares of utilities and builders of data centers. Now investors are moving further afield in search of beneficiaries from the hundreds of billions of dollars flowing in to build out the AI economy. And we have a quote from Brian Sponheimer, a portfolio manager at Gamco Investor Inc.'s Gabelli. Quote, you just saw a market that was thirsty for non-Magnificent Seven winners regarding, effectively, the information economy or the digital economy. Shares surged 14% in September, the best month since December 2023. Now, one has to imagine that with the interest in mining in general, that people are also just buying Caterpillar, one would imagine. And scrolling down, we have Oppenheimer analyst Kristen Owen, who said, it's not just Caterpillar's turbines that are in demand thanks to AI. The company sells equipment used to mine the copper that's needed for data centers, Owen said, while the firms putting up the buildings themselves will need more of Caterpillar's construction equipment. In a sense, one could argue with all of the development and money that is pouring into the mining sector, surely Caterpillar is going to benefit. So quite interesting over there. Now, another fascinating story here. This is by energyvoice.com, and they refer to new research that was conducted by the Colorado School of Mines. And listen to this. U.S. could eliminate critical minerals imports. They're all in-house. According to research, all the critical minerals the U.S. needs for energy, defense, and technology are already being mined domestically. So quite interesting. It continues, there is in fact zero need to go hunting around the world for minerals such as lithium and do deals with the Chinese. Turns out the resources are all in-house and perhaps unwittingly, President Donald Trump is creating the right conditions for a major push on domestic critical minerals production at home thanks to his global tariff war. Notwithstanding, everyone involved in the extraction of minerals in the U.S. has got to get a whole lot smarter at how they set about mineral extraction in the first place. So, quite an interesting headline there. One wonders, one thing's to have all the minerals you need, another thing is to be able to process them. And that is a completely different story. And once you have the processing, then it's a matter of how cheap can you do your metal processing, because why are we developing all these metals? What is the point? There is defense, and there is the economy, and if your cost of doing business is higher than your competition, one could argue China being the main competition for the United States right now, if you can't produce metal at as a cheaper rate as they can, then you're going to have a higher cost of doing business. So it's not simply about creating the processing facilities, then you have to do it competitively. So this is no small mountain to climb here. As people point out, China has a good 20-year head start and a huge amount of engineers. So let's continue. Another development, Pakistan ships first batch of rare earths to U.S., sparks outrage over secret deals. This is India Today. As the summary says, Pakistan has dispatched its first shipment of rare earth minerals to the United States under a $500 million deal with an American company. The Imran Khan-led PTI has raised concerns over the secrecy of the agreements, demanding full disclosure. Critics fear such deals undermine Pakistan's sovereignty and national interest. The sample shipment that was shipped to the U.S. includes antimony, copper concentrate, and rare earth elements such as neodymium and praseodymium, according to the report in the Dawn on Monday. And the company in question is U.S. Strategic Metals, who signed a memorandum of understanding with the Pakistani military engineering arm, Frontworks Organization, in September to invest approximately $500 million for setting up mineral processing and development facilities in Pakistan. And meanwhile, we have this headline that came out of the Financial Times. On October 4th, Pakistan courts U.S. with pitch for new Arabian seaport. And you scroll down to the bottom of the article, where oftentimes you'll find some of my favorite content. For whatever reason, seems to always be packed at the end of these articles. As it says, scrolling down, Mike Holloman, USSM commercial director, said the company aspired to set up a refinery and last month met directors of Pakistan's two major ports, at and near Karachi, as well as a representative from Gwadar during a visit to the South Asian country. And as it says near the end of the article, there's talk of a possible port near the town of Pasmi. The town had a natural deep-water port and could be linked by rail to Reko Diq, a copper and gold mine being developed by Canada's VRIC Mining. So it, quote, made a lot of sense to set up a facility in the area, he said. So quite interesting. As I've said here before, it's almost like if you wanted a meta headline on all of these headlines, it's United States scours globe for critical minerals. Continuing on, a headline from a staff writer at mining.com, first shipment of tungsten from Rwanda arrives in the U.S. The first shipment of tungsten concentrate from Trinity Metals' Nyakabingo mine in Rwanda arrived this week at Global Tungsten and Powders plant in Towanda, Pennsylvania. Officials from Trinity Metals, GTP, and Traxys were joined at the facility by the U.S. ambassador to Rwanda and the deputy Rwandan ambassador to the United States to witness the arrival. So, major diplomats to witness this event. GTP is the largest tungsten processor in the United States. Scrolling down, under the commercial agreement reached in August, GTP's processing facilities have begun receiving materials from Rwanda for processing into high-quality tungsten and tungsten carbide powders that are used to produce finished components for industrial end uses. And we have a quote from Trinity Metals chairman Sean McCormick, who said in a news release, quote, "It is an honor to see our material from Rwanda here at one of the largest tungsten processors in the world being converted into products that will help make America safer, stronger, and more prosperous. In turn, the nearly 7,000 employees of Trinity Metals and government of Rwanda will benefit from such market access and the deepening of strategic ties between the two countries." So that is Trinity Metals. Then, this morning, we have a new headline in the Financial Times in regard to Trilogy Metals. So not Trinity Metals, but Trilogy Metals. And here is the headline: White House says it will take 10% stake in Trilogy Metals. And this is by Jamie Smith, Camilla Hodgson, and Lauren Fedor at the Financial Times on October 7th. The Trump administration has said it will take a 10% stake in a Canadian mining company and allow a controversial infrastructure project in Alaska as it aims to break U.S. dependency on China for critical resources. The $35.6 million investment in Trilogy Metals was announced on Monday as the White House approved the Ambler Road project, which the Biden administration had blocked based on its environmental impact. The road would open remote areas to mining companies, including Trilogy. And we have a quote from Doug Burgum, U.S. Secretary of the Interior, quote, "We are making that investment so that we make sure that we are securing these critical mineral supplies and that ownership will benefit the American people. These are minerals that are absolutely essential to defense, to industry moving forward today. Just take copper alone. This is one of the richest copper locations in the country. Shares in the company, which is listed on the New York Stock Exchange and Toronto Exchange, soared by as much as 214% in after-hours trading. The investment in Trilogy follows a series of similar deals that the White House has struck to bolster the domestic mining and minerals sector, including taking equity stakes in Lithium Americas and rare earth miner MP Materials." So the Amber Road project is said to have large deposits including copper, cobalt, and of course, importantly, gallium and germanium. And here's President Donald Trump. Quote, "It is an economic gold mine, so to speak. This was something that should have been long operating and making billions of dollars for our country and supplying a lot of energy and minerals and everything else that we are talking about." So there is President Trump discussing a smaller mining company. It is quite something. And of course, Jay and I discuss this whole dynamic that's going on with the U.S. administration investing directly in mining companies. So super interesting there. Then there was an exclusive from Reuters. Trump administration eyes stake in company developing Greenland rare earths mine. And this was the Critical Metals Corporation, according to 4 people familiar with discussions in the matter, that the Trump administration was discussing taking a stake. And that was on October 3rd. But then on October 6th, we have an update by a staff writer at mining.com. U.S. government pours cold water on critical metals deal. And it says the Trump administration is not currently considering a deal that would see it take a stake in critical metals, a White House official stated on Monday, as first reported by Bloomberg. On Friday, Reuters reported that Washington had been in talks over an equity investment in the New York-based company while it was completing a deal to buy a 5% stake in Lithium Americas, a developer of a large lithium project in Nevada. So this is quite something. And also, in Greenland, we have a headline from Politico. UK closes in on critical minerals deal with Greenland. And this looks like it's being done on more of a governmental level. Scrolling down, the UK government confirmed on Friday that it has restarted free trade talks with Greenland. It said the officials were seeking to strengthen cooperation on critical minerals, noting that UK firms currently hold a third of mining licenses in Greenland. Now, it's interesting here. The UK is taking what we might call a governmental approach, going government to government. One wonders, with the Trump administration, when they take a stake in, say, Trilogy Metals of 10%, do they notify the government of Canada? Quite interesting. Another headline, Nova wins $43 million Pentagon award to build antimony hub, shares skyrocket. So we're drowning in news here. Nova Minerals has been awarded $43 million by the U.S. Department of War, or DOW, to support the production of antimony trisulfide at its Estelle project in Alaska. Shares of the Australian miners skyrocketed on the news. Another headline, U.S. offers to buy stakes in Australian critical minerals companies. This is Reuters via mining.com. The U.S. government has offered to buy equity in Australian critical minerals companies as part of a funding package to expand its supply and cut its reliance on China, executives recently returned from Washington said. So they're also approaching Australian critical minerals producers. So the U.S. continues to scour the world for natural resources. And final couple of headlines here. China's deepening foothold in Moroccan critical minerals rattles Europe. That's from the Africa Report. And also another headline. This is by the Mercator Institute for China Studies. China's rare earth export controls hit EU rearmament. Something we've discussed here a few months ago was the notion that these export controls on the dual use of rare earths, in other words, not just for commercial application, the dual use being also for military application, being kept back in the name of non-proliferation of weapons. We're getting more headlines saying that this is, in fact, impacting European rearmament. And also an update on Korea Zinc. This is Korea Junang Daily. Government designates Korea Zinc's smelting tech, quote, national key technology. This is something that Korea Zinc's management has been trying to do for months, which is to get this smelting technology designated as a national key technology from my understanding, it makes it way harder to take over. And final story here, and just the headline, I think it's enough, because we have the military applications for these critical minerals, but there's also an incredibly important economic application, and one could argue the stronger your economy is, arguably over time, the stronger your military is going to be. Look at this headline from CNBC. BYD's UK sales soar 880%, making it the EV maker's largest market outside China. Year on year, BYD's sales are up close to 900%. Chinese electric car maker BYD sold 11,271 cars in the UK last month. The company said on Monday, representing year-on-year growth of 880%. The sales bring its yearly total to just over 35,000 in the country, the company said on Monday, making the UK its largest market outside of China. So interesting to actually see, the other side of the supply chain, and BYD continues to go from victory to victory. So lots going on here, and we have more news stories coming up, and also a wonderful interview with Jay Martin of VRIC and VRIC Media, who discusses how he is approaching the big bull market in gold and silver. You're not going to want to miss that. And also coming up, we have Albert Boer of Becker Mining Systems, who discusses the latest technological developments at the company. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Albert Boer of Becker Mining Systems for this week's Spotlight.
Join us today. I'm very pleased to welcome to the Northern Miner podcast for this week's Spotlight, Albert Boer, CEO of Becker Mining Systems Canada. Albert, welcome to the show.
Thank you for having me, Adrian.
It's a pleasure to have you. And maybe just actually very briefly, if you can you tell us a little bit about Becker Mining Systems, like a bit of background on the company?
Yeah, so I'd welcome the listeners to actually look at our webpage and get a better understanding of Becker Mining Systems. But in brief, it is a family-owned company. It was founded in 1964 and it expanded internationally. Our focus has always been mining, and our expertise lies in that. So from a safety perspective, all of our products is safety orientated, and communication has always been a pivotal point in that transition, with the latest being a specific focus on AI and data transmission from underground and what we now call digital mines or digital twins.
It's so interesting, the relationship between mining and technology in this industry. In some sense, some people feel like it is very slow moving. Other people increasingly are feeling like it's fast moving. So what kind of changes are you seeing from your perspective in the global mining industry in the last few years?
Yeah, it's an interesting one. I suppose from the outside, it does look like mining more often than not is a slow adopter of technology. It's not the case. It's just that there's a lot of lives that depend on the technology and making sure that it is ideally suited for underground or mining in general. And we've seen over the last more focus on, I want to say, staff safety from a remote perspective, whether it's tele-remote control or agnostic data, allowing users underground to be able to do the work that they would have needed to do on surface afterwards, speeding up the process. There's also the extent of removing people from dangerous situations underground. And again, back to the tele-remote being one of the most, I want to say, stronger drivers in the market at the moment.
Okay, excellent. So what do you see is the main driving force in advanced communication technology in mining in the present?
It's knowledge, but more than just the mere assumption of knowledge, it's physically actually storing and being able to utilize it. So the mines have always had an abundance of data being captured from underground and surface applications, but it's always been segmented in different departments. The new technology driver at the moment is bringing all of that together into one platform where the client can actually understand what's going on in the mine almost real time.
Okay, excellent. So what does that look like in practical terms then? How are mining companies using advanced communications? What kind of examples can you give of what is being utilized right now?
Yeah, some of the, I want to say, more concrete solutions would be typically from a reliable and robust communication system underground, where the users have got access wherever they are in underground workings to be able to talk to not just workers in the same level, but even on surface or internationally, globally, speaking to other people or users, but also then the data itself, whether it is from a conveyor belt or a vehicle, Typically, some of the use cases would be identifying service intervals on vehicles, detecting maybe a high increase in atmospheric related contaminants that should be looked at, or even, preventatively bringing up solutions to the client saying, we've identified that your conveyor belt has potentially got an increase in current consumption over the last 12 months. Can you have a look at it and see what the cause is?
Very interesting. So just to clarify then, is this ultimately using sensors that are basically connected to the internet and that they are being monitored somewhere above ground?
To an extent. So a lot of our clients are still adverse to having cloud-based connectivity, and most of it's on premises, but we do offer both. But yes, it is either whether it's a Beckett technology from our sensors or third-party technology, we can integrate those sensors into our software application and give the client a global overview of what's happening in their operations.
And so, in terms of what is happening and communicating throughout the organization or throughout the mine site, is there a difference between, communicating above ground and communicating underground?
Yeah, there's a huge difference. I remember an article some years ago about a telco operator in Africa boasting about how simple it would be to do an LTE solution on this particular mine that he keeps on driving past every day, because he just sees this little outcrop of the head frame and he thinks that's pretty much the extent of what a mine is. So underground communication is by far more complicated due to just the vast tunnel distances that would have to be traveled and effectively have communication in that underground infrastructure. So yes, on surface, we can stand and shout at each other and your voice carries a certain distance. Underground, you don't have that luxury. So it is by far more complicated, as well as the risk associated to it. If you go underground, you're pretty much there for 8 hours. You can't just pop up from underground every 5 minutes to fix something. Beck has been doing this for some years. I've been with the group now for 23 years. And from a radiating cable infrastructure, we've covered it all. We've done various tests from, Africa all the way through down to the States and in Canada. And time again, radiating cable infrastructure has proven to be the most resilient and ideal suited for tunneling applications, specifically when it comes to blocking of infrastructure, whether it is steel or rock infrastructure. We have seen over the years some people trying to do what we call distributed antenna solutions, and those would be heavily impacted by metal and other obstacles in the line of sight of that communications signal.
Okay, very interesting. So do you use cables then? Is that how you solve for that?
To an extent. So, not every mine is the same. Every client's got a unique difference. So we prefer to coin the phrase of hybrid solutions. So we would not advocate one specific solution for all our clients. We have a myriad of different applications that we can augment and change according to the client's needs. So more often than not, it would be probably 90% cable infrastructure with some antennas in the remote working areas where having cable infrastructure based on blasting activities is not feasible.
Okay, very interesting. Now, of course, AI is the big technological revolution that we have going on right now. I'm sure your clients ask you about it. I'm sure you're incorporating it into your business. So how are you utilizing AI? And, in a bigger sense, like how is the mining industry, how is it using AI in this regard?
You're right. It's a catchphrase. A lot of companies are using it as a go-to-market sales pitch. I think very few are actually implementing it in a proper way, in a sustainable way as such. So Becca's got two avenues on it. One is from our sensor perspective, where we do vision AI, physically taking video data and sensor data and giving the client reports based on what we perceive to be issues. So typically, whether it's on a conveyor belt, identifying blockages before it happens as a solution. The other one being from a software perspective. So if we look at the digital mine or digital twin, we would look at the data and be able to give you some assumption as potential, restrictions or pitfalls coming down the line on your product process. But we are also then able from within the application utilizing AI. So in the past, if you wanted reports, you needed to have these pre-written, rather structured, where we can now do those queries from an AI perspective. So typically having to rewrite a report saying, I'd like to know which person's underground at what time, in what location, we can now type that into the actual context of the software, and it would formulate the report based on the client's requirements or criteria.
Okay, excellent. And so where do you think this is going in terms of AI? Like, are we just getting started in terms of the innovation here? How do you see where things might go from here with AI?
I don't think AI is really as intuitive as what everybody thinks it is. It's still years away from a self-sufficient system thinking about how to do things similar to a human being. What it is aiding us is taking away a lot of the monotonous visual inspection. Again, back to cameras. If I had to have a security guard sit and look at a camera for 8 hours, they tend to become blind to what's going on because it's so custom to them. Whereas AI would look at those minute differences and flag that for a person to review. So I wouldn't see it as replacing people. I would think of it more as aiding people to be more productive.
That is very interesting. I tend to think of that myself with AI, that as a collaborator, it's wonderful. So as we start to wrap up here, Albert, what processes in mining operations can be digitized, and what are the benefits of digitization?
Yeah, so, Becker's got 6 core products. The one that comes to mind with regards to that would be our power distribution range, which we coined ENDIS, which actually has the capability of remotely monitoring all of our electrical apparatus and remotely safely disconnecting components. So typically, I think, from a power distribution perspective, you would be more often than not almost forced into a specific product based on the requirement. Whereas if you do the automation on that, you can have one product that you can customize remotely through a bunch of data sets and make it usable in a myriad of different applications.
Okay, excellent. So what is it that you want people to know who are listening to this conversation? What do you want them to take away from what we're discussing here about Becker Mining Systems?
Yeah, I think the key takeaway from us is that, Becker Mining Systems is a family-owned company with grassroots in mining, whereas the majority of our staff members are actually ex-mining people, whether it's from a physical mining perspective or engineering aspect. We live mining on a day-to-day basis. Our products aren't commercially off-the-shelf products that we buy from Best Buy or equivalent and cram into a box to supply to mining companies. They're custom designed from the ground up specifically for miners and mining environments.
And finally, who should contact you? Who is your typical customer? What kind of people should reach out to you? And if they want to, how should they reach out to you?
Again, our contact details are on the webpage. All the email addresses are there. I'm happy for anybody to contact myself or any of our staff. We are willing and hoping to talk to all walks of life. So whether it's a junior person starting at a mining company or a senior executive, we like to engage with the whole life cycle of the mine. The reason why is we might end up having solutions for the junior guys with regards to key requirements, or we might have insight with regards to specific mining practices. Case in point being the monorail systems that is revolutionized for coal mining application, but not overly used in hard rock applications.
So the website is becker-mining.com, becker-mining.com. Albert Bauer, CEO of Becker Mining Systems Canada, thank you for joining us and sharing everything that you're working on at the company.
Thank you, Adrian.
And thank you once again to Becker Mining Systems for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, visit becker-mining.com. Turning to the website, we have a tragic headline. The remaining workers that were missing at the Grasberg mine have been found dead at the Grasberg project in Indonesia. It's by Cecilia Jamasmi at mining.com. Freeport-McMoRan has recovered the bodies of all 7 workers who went missing at the Grasberg copper mine in eastern Indonesia following a mudslide last month that halted production at the site. The last 5 miners were found on Sunday, concluding a weeks-long search effort after 800,000 tons of wet materials swept through the site in early September. Grasberg is the second largest copper mine in the world and a critical asset for Freeport's Indonesian operations. One of the identified victims was Victor Bastida Ballesteros, a Chilean national. The remaining victims are undergoing formal identification. And we have a quote from Chairman Richard Adkerson and President and Chief Executive Officer Kathleen Quirk, who said in a statement, quote, "We are grieving for our 7 coworkers lost in this tragic incident and extend our sincere condolences to the families who lost loved ones. We appreciate the extraordinary efforts of the emergency response team who worked tirelessly to locate our coworkers." So a tragic outcome for the missing workers at the Grasberg mine complex in Indonesia. Continuing on, Mali Army holds back 70 Allied gold trucks as militants block fuel imports. So as the gold price moves from record to record, this is giving increased attention to some of these gold mines in conflict zones in the world. Mali's military has prevented about 70 fuel trucks from traveling to Allied Gold's Sadiola mine after al-Qaeda-linked militants imposed a blockade on fuel imports to the landlocked country, 2 people familiar with the matter said. Fuel supplies are dwindling at the remote gold mine located some 650 kilometers from the capital Bamako, they said. Mali's military government, which took power after coups in 2020 and 2021, is facing growing pressure from militant groups who analysts say are trying to encircle cities and towns in the Sahel region. Quote, "We are telling all traders who import diesel and gasoline into Mali, whether from Ivory Coast, Guinea, Senegal, or Mauritania, to stop doing so until further notice." A Jamaat Nusrat al-Islam wal Muslimin militant spokesperson said in a video announcing the blockade in early September. So, a tricky security situation in Mali, to put it mildly. Continuing on, China, Malaysia in talks for rare earths refinery project. This is Reuters via mining.com. China and Malaysia are in early talks for a project to process rare earths, with sovereign wealth fund Khazanah Nasional likely to partner with a Chinese state-owned firm to build a refinery in the Southeast Asian nation, people familiar with the matter said. If the joint venture takes shape, it would represent a significant policy departure for China, the world's top supplier and refiner of rare earths, which has banned exporting of its processing technology to protect its dominance of the industry. Beijing is ready to swap its technology for access to Malaysia's untapped rare earth reserves, seeking to limit competition from Australian rival Lynas Rare Earths, said two sources in Malaysia with knowledge of the talks. All four sources who spoke to Reuters for this report sought anonymity because the matter is a sensitive one. So interesting development there. Continuing on, Turkey eyes U.S. rare earth deal after China-Russia talks slow. This is Bloomberg News via mining.com. Turkey is discussing developing rare earth reserves in western Anatolia with the U.S., marking a shift towards its NATO ally after similar talks with China and Russia slowed amid disagreements over technology transfer and refining rights. Ankara and Washington are exploring a potential partnership to develop a large reserve of rare earth deposits recently discovered in Beylikova, near Eskişehir in central Anatolia, according to people familiar with the matter who asked not to be named because the talks are private. The discovery includes cerium, praseodymium, and neodymium, with the quality unclear at this stage, they added. So the U.S. just moving on all fronts. On critical minerals, continuing on, Anglo American takes Peabody to arbitration over failed $3.8 billion deal. This is by Cecilia Jamasmi at mining.com. Anglo American has launched arbitration proceedings against Peabody Energy after the U.S. coal producer pulled out of a $3.8 billion agreement to acquire its Australian steelmaking coal assets. The deal collapsed in August when Peabody invoked a, quote, material adverse change clause following a fire at Anglo's Moranbah North Mine in Queensland. The underground blaze, triggered by high gas levels, forced operations to halt in April and gave Peabody grounds to withdraw under the contract. Continuing on, Congo to permanently ban cobalt exporters that breach quotas. This is Reuters via mining.com. The Democratic Republic of Congo will permanently ban cobalt exporters that violate its new quota system, President Felix Tshisekedi has warned, as the world's top producer tightens controls to curb fraud and stabilize prices. Congo, which accounts for about 70% of global cobalt output, halted exports in February after prices of the critical electric battery metal hit a 9-year low. According to minutes from Friday's cabinet meeting seen by Reuters at the weekend, Tshisekedi plans to apply, quote, exemplary sanctions, including permanent exclusion from Congo's new cobalt regime, to any violators of the system. Continuing on, U.S. nuclear plants face widening uranium supply gap, EIA warns. This is Bloomberg News via mining.com. U.S. nuclear utilities face possible uranium shortages over the next decade, the Energy Information Administration warned, underscoring supply chain challenges in the world's biggest atomic power market. Utilities signed fewer contracts for delivery last year as uranium prices surged, a report by the U.S. agency said. High costs are pushing them to delay decisions to cover future fuel requirements, even though less than a tenth of the uranium delivered to U.S. reactors is typically bought on spot markets. The uranium supply gap is expected to widen over the next decade to a combined 184 million pounds, equivalent to more than 3 years of consumption. In the absence of long-term supply deals, the EIA report suggests more utilities may need to forge shorter-term arrangements to keep reactors operating. While Silicon Valley investors pour billions of dollars into designing nuclear reactors, the EIA report suggests continued U.S. vulnerability in fuel supply. More than 90% of the uranium consumed by the U.S. reactors last year was sourced internationally. And also on the uranium front, Urenco gets U.S. approval to make more powerful nuclear fuel. This is Bloomberg News via mining.com. Urenco USA, the only U.S. supplier of nuclear fuel for conventional reactors, has received permission from regulators to make a new type of uranium fuel. The company expects to begin production of the fuel this year at its site in New Mexico, with commercial deliveries expected in 2026, according to a statement Thursday. Conventional reactors in service now use uranium fuel with a 5% concentration, known as LEU, or low-enriched uranium. The company now has permission to produce fuel with a 10% level LEU+. The higher concentration means reactors can run for longer periods before they need to be refueled, saving operators money. The industry is also developing a supply chain for a fuel that's enriched up to 20%, which is expected to be needed for the next generation of reactor designs. So perhaps a way of dealing with an impending shortage in uranium. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.16%. That is 0.03% higher on the week. The UK 10-year gilt is yielding 4.75%. That is 0.04% higher on the week. Italy's 10-year bond is yielding 3.6%. That is 0.04% higher on the week. France's 10-year bond is also yielding 3.6%. That is up 0.07% on the week. So isn't that interesting? Italy and France's 10-year bonds are yielding the same amount. Germany's 10-year Bund is yielding 2.73%. That is 0.03% higher on the week. The Japanese 10-year bond is yielding 1.68%. That is 0.04% higher on the week. And finally, China's 10-year bond is yielding 1.87%. That is 0.01% higher on the week. So bond yields higher across the board as gold continues to hit new records. Turning to precious metals, gold is trading at $3,974.90 per ounce. That is $92 higher than last week. It seems like we're going up $100 a week here. Silver is trading at $48.03 per ounce. That is $1.12 higher than last week. Platinum is trading at $1,634.90 per ounce. That is $28 higher on the week. And palladium is trading at $1,325.50 per ounce. That is $63 higher on the week. Turning to industrial metals, copper is trading at $4.98 per pound. That is 15 cents higher than last week. Iron ore is trading at $104.36 per metric ton. That is $1.08 lower than last week. Aluminum is trading at $1.23 per pound. That is a penny higher than last week. Lead is unchanged at 91 cents per pound. Nickel is back above $7 at $7.02 per pound. That is 7 cents higher on the week. Tin is significantly higher at $16.99 per pound. That is $1.34 higher on the week. Lithium is unchanged at $10.33 per kilogram, and uranium is slightly lower at $81 even per pound. That is $1.50 lower than last week. And zinc is higher at $1.36 per pound. That is 2 cents higher on the week. Zooming out, gold continues to make new records. Silver continues to approach its previous record. Precious metals in general showing a lot of strength, while copper recovers from its recent lows. Iron ore showing some strength at $104, and tin just below $17, also a standout. So the animal spirits continue to assert themselves in the metals markets, and those are your metal prices. Coming up, I'm very pleased to welcome back to the show Jay Martin, President and CEO of VRIC and VRIC Media. We discuss gold, the gold stocks, precious metals investing, and investing across the metals sector, and how not to round trip if you are up significantly on your investments, how Jay is approaching the big gains we're seeing in gold and silver stocks, and the strategies he is employing in order to safeguard his gains. A super interesting discussion. I hope you enjoy it, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the Northern Miner Podcast, Jay Martin, President and CEO of VRIC and VRIC Media. Jay, welcome to the show.
Hey, Adrian. Great to be back, man. Good to see you.
It's great to have you, Jay. You've always had your pulse on what is happening in the resource sector. Of course, you have your show. You have the big conference you do in January with VRIC. You have a lot going on. And so as you look at the big picture here, with gold hitting a new record, silver looking like it's about to, there's a lot of animal spirits out there. There's a lot of cross currents. I mean, what is top of mind for you as you consider what is happening in the commodities sector with emphasis on gold?
Yeah, okay. So if we're going to start with gold, and because you mentioned that gold is at all-time highs, the first thing I want to say, it may not be exactly what gold investors want to hear, but I just encourage any investors in the gold sector, if you've been here for a couple years, to take some profits. The investors often make the same mistake in every bull market, and they hang on for a bit too long. If you've been in this industry for, myself, 15 years, yourself, maybe about the same amount of time, even if you just got here in 2020, 2022, you've been through some hard years, right? And now you're finally getting rewarded. Stay in the game, but de-risk. And so, I'm getting a lot of text messages and Twitter DMs about people who are showing me they're up 500, 600% on XYZ position. I'm like, that's great, but make it real. Take some cash off the table. It's not real till you sell. That's the harder part of the trade. And so as we see a bit of froth enter the sector, and I think we're early, by the way. I'm not saying this because I think the gold equity market is due for some big correction or it's got ahead of itself. I don't think that at all, but it is a volatile business and will always be. And if you look at the best investors in this industry who are household names in the commodity sector, they've all done one thing incredibly well, and that's stay at the table. Duration, the Rick Rules, the Eric Sprots, the Thomas Kaplans, they stayed at the table through good markets and bad, because they de-risk when they get the opportunity. That doesn't mean sell your whole position, but de-risk it a little bit. And that's the gift the market is giving to you right now. If you've been in this industry, even for the last 3 years, you had to suffer a little bit. Now you got this gift to de-risk a little bit, you should take it. And I'm doing that with my smaller positions and the Explorer Cos and Development Cos who are more volatile and see quicker rises, but I'm still reinvesting that money in the gold industry. I'm just putting it in more stable bets. And so for anybody who's brand new to the industry and curious about, I'm watching gold rally and I want to participate, where should I begin? You can generate a list of what I would call the FANG stocks of the commodity sector, right? And these are the Newmonts, these are the Agnico Eagles, the Franco Nevadas, and the Wheaton Precious Metals that have extraordinarily powerful management. They're great stewards of capital. They have very healthy balance sheets. Their assets are diversified from a jurisdictional standpoint. And so they're a great way to dip your toe in the water in the gold sector and start to understand price action and sentiment. And even if you've been in the industry a while, it's a great place to withdraw some of your high risk bets and park them somewhere for the longer term, more passive approach to the sector. So very bullish on gold. But as we all know, when gold goes up, it usually means a bunch of things are breaking. It's, good news for gold investors is bad news for pretty much everybody else. And that's why it's so important to de-risk, because as gold goes up, things are breaking left, right, and center. And so volatility is just going to be built into the future.
The point is so well taken as someone who has held on too long in the past a few times, actually. I was hoping I'd learned that the first time, but it
Right.
actually, the second time I participated in the crypto thing, and yeah, I mean, I was rich.
On paper.
Yeah,
Yeah,
on
yeah.
paper, but it's just such a point well taken. I mean, I interviewed Rick Rule last year at the International Mining Symposium that the Northern Miner puts on in London. And in the conversation, I mean, one of the big takeaways, if not the big takeaways, is the hardest thing to do is sell. In a sense, buying something that looks attractive, okay, you got to have some, brains to figure out the right investment, look at the thesis, maybe be a bit contrarian, but selling is hard, to your point. So I think it's a point that is very well taken. Take some profits. And again, not financial advice. And I quite like your strategy because, in a sense, with, say, companies like Agnico Eagle, for example, you get the sense that even if gold goes down to $2,000 an ounce, they're still probably minting money, right?
Yeah. And you're right. Selling is by far the harder part of the trade. And how many times have I or seen other investors go for what we call the round trip, right? Where you enter a position at 50 cents or a buck and you realize a bit of an appreciation. And so instead of de-risking, it just adds to your conviction that you were correct to make that order, right? I'm more correct than I thought I was. Look, I'm up 50%, I'm up 100%, right? And then when the share price corrects 20%, and then 30%. You're now anchored to that recent high and you don't want to sell at what you're perceiving to be a loss, even though it isn't. And way too frequently, you see investors realize a massive gain on paper and then give it all back to the market. Don't do that. Take some profits when you have the opportunity.
Just in terms of thesis on gold, what do you see as basically the gold thesis, in a sense, from your view? And the reason I ask you this, because there are several reasons, but that is almost my point. Because every time I look at a new article, the latest reason, for example, was the lack of Fed independence, right? It's almost like the price moves and then all of a sudden the reasons come in. But why is gold a good investment?
Yeah, that's funny. That's like behavioral economics breakdown 101, right? We're so smart in hindsight. Once a price moves, then we can diagnose exactly why it happened. Obviously, if we were right, we see the future just as clearly. And so it's easier to make sense of the past. My thesis on gold, yeah, there's a lot going on, but to sort of catalyze my thought process, Adrian, gold is the asset you want to own when you don't know what's around the corner. And the bigger that boogeyman might be, the more things that might go south, the stronger the reason you want to be positioned in gold. And right now, at a global level, and we've seen this now for 3 4 years. 2023, we are watching central banks pile into physical gold at a rate that we hadn't seen in about 50 years because they were less certain about the future than they'd been in about that same amount of time. Shortly thereafter, institutions started piling in as well. And that's when we saw the Wheaton Precious Metals and the Francos, the streaming companies, begin to hit all-time highs. And a year later, it was the majors that followed suit as the capital trickled down to the earlier stage bets. And that's my thesis today. There's so much funny business going on when you talk about global macro or global finance. A lot of it is just, for example, we're watching all these trade agreements occur right now. And there's always the headline and then there's the substance. And it's important that you pick these things apart, right? The United States has been on a roll recently announcing all of this foreign investment into the US economy, for example, right? $100 billion from Taiwan, $350 billion from South Korea, $600 billion from Saudi Arabia. And all this sounds great. But when you pull apart the details and see there's a lot of smoke and confusion here. Like let's look at South Korea, for example. They were able to get out of tariffs in exchange for promising to invest $350 billion into the US economy. Problem is, South Korea doesn't have $350 million just sitting under a mattress. They have to get that money from somewhere. And they've only got three options. Number one is they can pull it from their economy from somewhere in the government budget that already needs it. They've looked at that. And the president of South Korea came out just last week and said, look, if we do this, we're going to trigger an economic collapse in our country on par with the 1997 Asian financial crisis. So think 2008, but in Korea. In a democratic country, that's completely politically unpalatable. There's no way they're going to do that. Option two, and they put this option forward, is that they borrow that money from the United States. So they'll invest the $350 billion if they can borrow it from the US. Okay. US also doesn't have that cash sitting under a mattress. So they will print it. They will give it to the South Koreans, who will then invest it back into the economy, devaluing the US dollar, reducing the purchasing power of Americans. Again, politically unpalatable, but probably something like that will happen. And the third option is just that South Korea already owns a bunch of US assets. They've been investing in America for like 30, 40 years. So they own US equities, stocks, bonds, treasuries, and real estate. Probably what they'll end up doing is selling those US assets to raise the $350 billion and then invest it in the US economy. Now you're tracking, like just because you pull money out and then put it back in doesn't make it new money, but that's probably what's going to end up happening. But the reason I mentioned this example is because this is happening left, right, and center right now at the global stage. There's so much just silliness, headlines, and fake wins that at the core is just, money printing and devaluation and uncertainty, right? This is not a sustainable situation. And so, when you pick apart all these trade deals, typically you find something just curious underneath. Countries don't know how to act, don't know what to predict or what to expect. And so that's why people are piling to gold. It's one siloed example, but that's sort of a sign of the times in this new age of trade under this current administration. Call it deglobalization, friendshoring, the fracturing of our global economy, whatever it is. It's definitely like less certain than it's ever been in my lifetime. And that's why we're seeing every actor from central banks down to retail investors now start to consider gold in a way they haven't in about 15 years.
That's very interesting how you frame that with South Korea. I mean, just on the administration, I am curious of your view. We saw the MP Materials deal. I think we just saw Lithium Americas recently. Do you have any view? It's kind of like we don't really have a choice. Subsidy is kind of a dirty word, and we all want to be free market. But at the end of the day, if China's basically going to support their industries, we kind of need to do something. But that being said, when I see it happen, then I'm a little bit, and it's not exactly a subsidy. They're taking an equity stake, which is maybe a smarter move than a subsidy. I guess we'll see. But when I do see it happen, I start to feel a kind of angst. What is your view on the U.S. government taking stakes in mining companies?
Man, that's such a great question, Adrian. I think about this a lot because I'm on the same page as you. I'm a free market entrepreneur. I'm a small government guy. But, if I step back and look at this objectively, and if I look at countries as if they were corporations, and I look at the United States of America company competing with the People's Republic of China company, then this kind of state capitalism that we're now seeing creep into the American economy is a strategic move. And, people think about state creep and they, right away form a tie to communism and they say, we don't want to be like communist China. And, the first thing I say about that is that if you think China's communist, just look deeper. It's not a communist country. Define communism and then try to lay that over the Chinese economy. It doesn't fit whatsoever. China is more of a corporation than anything, right? It's like how I run my company, right? I'm the CEO. It's not a democracy. I set the vision. I set the strategy. But you look down at the layers of employees, everybody has a lot of autonomy at their level, right? My team of leaders has autonomy within their responsibilities. So does my sales team, my marketing team, my admin staff. They have autonomy and discretion within their bucket of responsibilities as long as it's contributing to the core strategy that I put forward. And that's how the Chinese economy functions. And at the end of this year, they will put forward their 15th 5-year plan. They've done this every year since 1949, since the revolution. And they've been remarkably consistent with their 5-year plans. And there's usually like 20, 30 priorities in each. And you can track the evolution of the Chinese economy by looking at these priorities going back that far. And, back in the 50s and 60s, it was like, we need to find ways to industrialize our economy, produce more coal, produce more grain. We need to feed our people and heat their homes. Those are the priorities in the 50s and 60s. Today, you look at the 5-year plan, and it's like lead the world at robotic automation, lead the world at artificial intelligence. They're the tip of the spear. They began at the base of Maslow's hierarchy of needs not that long ago, and now they're right at the tip. And it's easy to point the finger at some of their social engineering practices, like the one-child policy, which has been a disaster. But you can't cherry pick. You have to look at the whole picture. And without question, that is an economy that has lifted more people out of poverty in the last 30 years than has ever been considered in history, right? No, I'm not saying we go that model. I'm not saying that at all. But you have to look at the whole picture. The Chinese economy now has over 2 million robots in their labor force, right? And in 2024, they added 300,000 more robots to their labor force. Guess how many the United States added? It was 34,000, 10% as many, right? And just a month ago, the Wall Street Journal reported on a bunch of venture capitalists that toured the high-tech industries in China, and they came back and reported on 5 or 6 industries, clean technology, battery manufacturing, electric vehicles, that they consider now to be uninvestable in the United States because of how much further ahead their Chinese competitors are. Now, all they're saying is that as capital allocators, we cannot allocate capital to these American industries when there's already a competitor so far ahead, right? And so that is a consequence of being very strategic with how you spend government money. Now, the United States prints money like it's going out of style. They just don't allocate it as effectively, right? And that's the problem. But we're seeing that change. And that's what you just brought up. We're now seeing state creep into important industries like the MP materials deal that you just mentioned. The Department of Defense is financing a rare earth refinery in the United States, the Lithium Americas deal, and that share price shot up 70% on the heels of the Trump administration saying they would take a 10% stake. The US antimony deal, and there's more, right? And I get it. It's a bit distasteful because I don't want government in my private business. But if they're building competitive advantages for American industries on the global stage, then it's good for commodity investors. I mean, if we could have the firepower of the US government adding some additional capital, cutting red tape and expediting the permitting processes of our core industries being raw materials, that's good for commodity investors. That's exactly what we should hope for, because big government's not going away and money printing's not going away. So if we have to live with those things, at least invest that capital into industries that make the country more competitive and that I'm also invested in, because that's a great partner to have from a capital standpoint. So, very similar to your thoughts. It's counterintuitive, but you have to look at the big picture. And, I was chatting about this robot adoption with on my podcast recently. And, the pushback I got on China adding 300,000 robots to their economy in the United States, only adding 10%, in the context of these VCs going to China and coming back and saying a lot of the core industries in the US are uninvestable. And then you say, well, China's also automating 10 times faster with the adoption of robotic automation. So what's it going to look like in 5 years, right? They'll pull further ahead. And the pushback I got was, well, we don't want robots taking our jobs. And I get that. I totally get that, right? But that's missing the forest for the trees, because if you have a politician step in and say, we're not going to automate this industry, we're going to protect jobs. Okay, you'll protect that job for a couple of years. But what's going to happen in the longer term? Well, that whole industry will become uncompetitive on the global stage, and nobody will be buying goods from that American industry because it's dragging a bunch of flesh and bone along with it that's no longer required and that our competitors aren't using. And so the same outcome will occur. You'll lose your job, but the whole industry will create it alongside. It's a much worse outcome. And so whenever we resist automation, you just got to think like, does anybody think we should go back to tilling the land by hand? Should we park our tractors and mechanize farming equipment? Like, would that be a smart idea? What would happen to the American ag sector if we did that? Like, prices would shoot up. It wouldn't work. So if it doesn't make sense in hindsight, it shouldn't make sense in foresight, right? And that's how we have to frame this. But I do think, like, I'm seeing a lot of positive developments from the American administration from a domestic capital allocation standpoint. It's not what I would have expected 5 years ago, but I think it's needed.
It's such a great point, and I share your view on the whole job situation. I mean, I think to myself, my 5-year-old self would say, why on earth are we trying to keep jobs? Don't we all want to live where we don't have to work? And it almost makes you wonder, like, is the trajectory here in China, everybody will be in some beautiful science fiction future where nobody has to work, and then meanwhile, we'll keep our jobs over in North America. But I say in jest. So bringing it back to the metals then, I mean, let's just dovetail what we were saying on China. I mean, it seems to me one of the main advantages they have is that they control a lot of the processing and refining of metals. And further to your point on what we might loosely call a subsidy or investing, like we've heard the G7 talk about price floors, and my sense is that we're starting to go too far when we start to talk about price floors, because the manufacturers are all of a sudden going to have higher costs if all of a sudden they have to pay double for the rare earths. Our problem was there wasn't enough financing in exploration and just in the mining sector in general. It just needed some money, just enough to keep it kind of going, get those processing facilities going. It seems like once you start to do price floors, there's going to be some unintended consequences, I think. So I feel like a light touch is maybe the best way to go. Do you have any thoughts on that?
Yeah, I think you're bang on. I think that's exactly it. When you start governing the price of items, you're putting restrictions that entrepreneurs have to navigate, and that slows the process down. When you provide capital to those entrepreneurs, that's a whole different story. So if we're going to see state creep, I pray that it is in the form of capital allocation to existing high functioning businesses like Lithium Americas, by example, like MP Materials, for example. That is the right kind of state creep that will amplify production, bring costs down. But when you start regulating the price of raw materials or products, that's just a recipe for disaster. That's like trying to land an airplane with a sledgehammer. It's just not going to work. You can't foresee all the damage that you're going to do. And, we're sort of at the mercy of our bureaucrats in that regard, right? It's, I hope we go this way, but we might go that way. And we're just going to have to wait and see. From a refinery standpoint, you're right. And it's tough for a democracy to compete with a dictatorship. It just is, because democracies have to somehow gather and keep political will in the long term. And that's really tough when you have to think in 2-year election cycles. And that's the core reason that, China's pulled ahead in the way it has. It doesn't have to wait for political will, doesn't have to worry about public sentiment. It can make whatever environmental concessions it wants to, and it has. The nickel market is like a great example of this, right? I'm here in Indonesia, and Indonesia today controls about 67% of the refined nickel industry. And this has been very strategic. President Widodo, previous president, tried to form a nickel alliance with Australia and Canada. Australia and Canada shut him down. And so he raised the money from China, $65 billion to build out the nickel industry in the Sulawesi Islands here in Indonesia. With the price of Indonesian labor and with their complete disregard for environmental considerations, they were able to flood the market with very cheap nickel and put most of the Canadian and Australian nickel mines on care and maintenance, because they can just produce a very dirty form of nickel a lot cheaper. Now, those islands are an absolute disaster. That's been the approach, right? It's like, let's just get the product to market and we'll worry about everything else later. Interesting, I was chatting with Rick Rule recently, and his take on the nickel sector is that eventually we will raise our global standard of environmental care, even in countries like Indonesia. He's actually bullish nickel right now. Now, if you look at the nickel price, it's like one of the only hard commodities that's fallen off a cliff. It looks completely uninvestable. And when you think about how does that change when Indonesia's strategy has been flood the market with cheap nickel to put your competitors out of business, take a bigger piece of the pie, and they are, I expect they'll be at 75% of the market by the end of the 2020s. And for context, like OPEC at its peak in 1973 only had 55% of the oil market. So 75 is bonkers, right? They have total price control. And how do you get out of that, right? I don't know, other than I suppose developed nations would have to somehow unify and agree that there's a new environmental standard behind their nickel purchasing. And that would bring, North American, Australian nickel producers back to a competitive place. I'm not sure if I'm as confident, but Rick's got a pretty great track record. He thinks in 5-year terms. He's like, don't expect this trade to materialize next year or the year after, but within 5 years, I'm very bullish nickel. And so, yeah, important to pay attention to that.
That is super interesting. And it's true, when you look at the metal prices, of course, we track them here every week. Nickel's looking pretty darn attractive below $7 there, while everything else is starting to move. So as we start to wrap up here, Jay, I want to get your sense of just a few of the metals. First, let's deal with silver. I mean, is your general sense is that silver is similar to gold in its investment thesis, just maybe a little bit behind? I mean, it's kind of famously known as a sector with only a few stocks. I mean, how are you approaching that market, or do you approach it differently? What is your sense of the silver market?
I'm more specific with the silver equities that I pick, for sure. And I like the increased volatility in the silver sector. So, for example, right now, if I'm de-risking from a couple earlier stage gold opportunities, I'm parking that capital in the more established gold production companies. I don't do that with silver. I park the conservative capital in major gold producers. I don't do the same. There's not a lot of pure play silver producers left. I mean, as you mentioned, there's not very many. There's maybe, 9 silver companies on the NYSE. And so I look at the operators. I've got some favorites in the sector in sort of the funded development stage. I think that's a great place to look for silver upside right now, maybe the unfunded developers as well. I'm not looking at pure play explorers right now in the silver sector, but I think there's enough upside to be captured in the slightly more mature asset division of the silver sector.
Okay, excellent. And as far as other metals that maybe are interesting you, I mean, What about nickel? What about lithium and these kind of down and out metals? Copper, I mean, I think is super interesting. What a gift, I thought, when copper went down to something like $4.30 after the big run up. Are
Yeah.
there other metals that you're interested in?
Yeah, nickel's interesting. And, there's a couple companies that I'm looking at right now, Centaurus Metals being one, Talon being another, Talon obviously being in Brazil and Centaurus being a North American play. I think long time horizon there. I think they're priced right, Talon specifically, if you're comfortable with what you might consider to be more political risk in Brazil than in Canada, that's debatable, but that's priced right if you have a long time horizon. So those are two companies that I'm not a shareholder of, but I'm looking at. And I think I have time to make that decision, which I like. Copper is sort of similar from my perspective right now, Adrian. If you were to ask me my sentiment on the copper sector over 10 years, I'm like very easily incredibly bullish. And if you step back and look at copper and supply and demand on like a 10-year increment, and you go back 50 years, what you'll see is like a very steady increase in demand and a very steady increase in supply decade over decade from the 70s, 80s, 90s, and 2000s. We increased demand by like 4 to 6 million metric tons, and we increased supply by the same amount. It was like right on the money every decade after decade after decade. And then around 2010, the little mouth started to open up where we weren't investing enough in new supply, but demand kept growing. And by 2020, that gap was a lot bigger. But because we didn't invest in copper really at all in the 2010s, I expect that gap, given that it takes 20 years to put a copper mine into production, but we're going to keep growing at the same amount from a demand standpoint, that mouth's going to get real wide. So the opportunity in copper, I think, is very real and very long term. And I would even say predictable. But the short term, anything can happen, right? As we mentioned, the reason gold is so hot right now is because of how uncertain our global economy is. So I'm just a bit more cautious on the short-term copper. So if I'm invested in a copper company, I just have to be very clear on my time horizon. Investors should be in general. If you're clear on your time horizon, then it gives you the muscle and the durability to withstand the short-term volatility. Like if I have a 3-year thesis on a gold company or a 5-year thesis on a nickel or a copper company, then does it really matter to me what happens inside of 6 months or a year? Like it shouldn't. Right now, it's hard. Don't get me wrong. We're emotional beings and money's important and watching a 30% drawdown sucks. But if you can reflect back on the reason you bought the position, and if that thesis is still intact and you're still inside your time horizon safe zone, then either buy more or sit tight, right? And be patient. And if you didn't bet more than you can afford to lose, then you can do that. Hopefully you rebalanced, you took profits, you de-risked, you did all that stuff. Do that stuff first, And the tool that so many investors miss is just old school diligence, right? For every position I own in the market, I have a 1-page worksheet that I fill out, 3 to 5 reasons I bought the stock, 3 to 5 reasons I believe the share price might go up, 3 to 5 reasons I might sell if I got something wrong. I've got the time horizon written down. And I learned this from my mentors in the sector, right? Rick Rule writes himself an essay for every single position he owns. Brent Cook, the same thing. I mean, all these guys do it. That's how they stayed in the game. But all that does is give you the ability to revisit that document when things don't go the way you thought they would. And you can say, am I wrong or am I just early? Right. And maybe it's that simple. But if you haven't done that kind of homework, it's tough to reflect back. It's easier to get caught up in emotions and get shaken out of position that, may still have the upside. You just got to wait for it.
I love that advice. It's like you got to hold yourself accountable from your initial thinking as to why you bought it. And one way of doing that is simply write it down. So many investors, I suspect, myself included, like I don't take the time to say, write these things down, but it's kind of crucial and can be a real difference maker in the end, can't it?
100%. Yeah. And, we have the Commodity University. It's an online school for commodity investors. And, when I bring this up with a new student, often they're like, oh, no, my trading platform records most of the data for me. I know my entry price, I know my average cost and all this stuff. And, I don't know if I need to write all that stuff down. Right. And it's like, okay, well, if I get it, this is going to take a couple hours of your time. If you're not willing to spend a couple hours of your time to justify the position, then probably you shouldn't be investing in the junior mining sector. Like that's not for you, right? So it's monotonous, it's redundant, and you could even argue with the amount of data we have access to these days. It's easy to revisit a press release on the day you bought and revisit your thesis, but it's not the same as codifying your thought process by writing these things down, right? And that's the difference. And it's just a good muscle to keep flexing.
I totally agree. It's like a way of insulating yourself from your own emotional side of yourself when it comes to investing. And we all like to think we're impervious to that. But yeah, we're all human at the end of the day. As we wrap up, Jay, any final thoughts, any big picture ideas, anything coming up?
I'm super pumped. You're coming back to the Vancouver Resource Investment Conference, Adrian. It's good to see you again. And for anybody who's curious about this industry and wants to get that competitive advantage, we gather 100 keynote speakers, 300 junior mining companies, 8,000 investors in Vancouver, BC for 2 days, January 25th and 26th. It is the insider's edge fully. You'll hear all the conversations that are happening in the boardrooms, and you'll get to just talk shop with people, hear their best ideas. Every keynote speaker I put on stage, it's like they're vetted based on their track record of allocating capital into the mining sector, and they jump up to the podium to tell you where they're allocating capital in the year ahead. So VRICmedia.com for tickets, January 25th, 26th in Vancouver. It's a great time, super fun.
Jay Martin, President and CEO of VRIC and VRIC Media. Thank you for joining us and sharing all of your perspective on this week's Northern Miner podcast.
Thank you, Adrian.
Thank you once again to Becker Mining Systems for sponsoring this week's episode of the Northern Miner podcast. If you want to learn more, visit becker-mining.com. And also a big thank you once again to Jay Martin for appearing on this week's show. And also thank you, dear listener, for continuing to support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.